Well, let's get talking this Monday afternoon. Despite the growing instability in Nigeria's foreign exchange market, which has continued to inhibit growth in Nigeria's operating environment, the business performance of the private sector recorded an improved growth rate in the month of November. While this stellar performance, according to reports, is attributed to the advancements in the business conditions on the backdrop of improving demand and higher customer numbers. Mr. TAJUDEEN IBRAHIM, who is the Director of Research and Strategy at Capitol Hill DENHAM, joins me now via Zoom to understand the performance of Nigeria's private sector and the state of the country's forex market. Mr. IBRAHIM, thank you so much. It's good to have you on the program.
Thank you for having me.
Yes, let's get talking. I know both of us have gone through this line, not just before now, but precisely towards the end of last week. It seems that the Naira is still one way or the other gaining some strength against the greenback. Two questions now. How sustainable is this, and what do you make of this?
Thank you very much. I think at Chapel Hill DENHAM, we believe that the current stability that we are seeing on the Naira to dollar exchange at the parallel market is an indication of two key factors. Number one is that demand is somewhat slowing down. Number two is that there is supply. We have BDC sellers or sellers on the street that have volumes to sell. So when you have those two factors, there would be some stability of the Naira against the US dollars, or you may even see the Naira appreciate a bit against the US dollars. So it's largely speaking, in my view, is an indication that whereas we were previously seeing speculative demand for the dollar, and it now seems like the speculative demand has slowed down, and then we are having some level of stability in the exchange rate at the parallel market. If you ask me about the sustainability, I think our view at Chapel Hill DENHAM is that the sustainability of the performance of the Naira at the parallel market is largely speaking based on two factors. Number one is the convergence of the currency in terms of exchange rate, which are largely speaking diverged as we speak. The second element is availability of liquidity at the several windows of foreign exchange. So if we have those two factors, I think we can be talking about sustainability. Otherwise, it is likely that the Naira will weaken further if we do not have convergence, and if liquidity does not improve, particularly supplies from the Central Bank of Nigeria. Those are our views.
Interesting stuff, but I'll follow up that I'm worried that as we move towards the festive season, many will expect manufacturers to, get in raw materials, go on large production, to be able to meet up with demand at this particular time. And I was thinking that that would be high, that would increase the demand for FX. But the black market operators are even saying that that demand has dropped. So really, I'm confused here.
So I think what really has happened is that the dollar requirement by most of the manufacturers, yes. I am talking here about large manufacturers, that they need in terms of sourcing raw materials for the remaining part of the year, most likely have been sourced and secured by most of those businesses. I think I can also comfortably argue that those large manufacturers that we are talking about are able to secure some of their US dollar requirements at the CBN window and also at the investor and exporter window, which is the I&E window. So one wouldn't really expect, the demand of, for dollars by large manufacturers to, weaken the currency at the, on the streets. So, but nevertheless, we still have, some small businesses. And I think, those small businesses have, less impact in terms of how they could weaken the currency at the parallel market. We are close to the end of the year, and my sense is that, most of these businesses have secured the dollar required for them to import raw materials for the remaining part of the year. Can we see this pressure resurface in 2023? I think the answer to that, in my view, is yes.
Interesting stuff. Well, let's talk about now further demand now, like for the aviation sector, who are yet to be able to repatriate funds. They can't get their funds back. Of course, the dollar issue remains one very, very. It's a great one. It's a stumbling block for business owners at this time. So now they cannot, and the CBN also says they cannot at 100% meet the pending demand that we have. Now, as we move to 2023, are we going to stay around the 700s, or do you think anything could push us up again to that? The first effect we had was a reaction to the redesigning of the Naira, which many thought that people used the dollars to mop up cash away from town. But as we move on, many are saying that it could even go lower. Do you think so?
Well, I think I really agree that, the currency could, weaken further. Let us bear in mind the fact that, we still have, some, speculative demand in the market. There are some, speculators that have lost money, some that bought the currency, the dollar at around 800 and, slightly above 800. They currently are in a loss position as we speak. So we have some of those, and some of them that have lost in the past, we still like to speculate further. So it is because we still have that divergence in the rate at which the CBN sells, and also the rate at the importer, the rate at the investor and the exporter window, which is around 445 Naira. So if you're able to buy at, either of those two windows, you can still sell at the parallel market at, a premium of around, 60 to 70%. That premium, in my view, has to disappear. In as much as, we still have that premium there will still be the incentive for, speculators to want to buy the dollar and hold, for further weakness. And I think, so this is where convergence is very important going into 2023. How can we achieve convergence? I think we can achieve convergence by, deliberate devaluation of the currency by the CBN. As we speak, the fair value of the currency based on our estimate is around 600 to 650 Naira, to a dollar, compared to the 444 Naira that is being sold, by the CBN. So that is on the one hand. On the second hand, there is need for us to see improved inflows, either in terms of foreign direct investment, or in terms of foreign portfolio investment, or in terms of diaspora remittances. We need to see improvement in inflows from those three sources, and also improvement in inflows from the sale of crude oil and, non-crude oil, sort of exports. So when we have inflows from all those channels, I believe that the CBN will be well equipped to have the required, reserves to support the currency by supplying to the market. But with the current conditions, it does not look like, the performance of the currency is sustainable. So we need convergence, one. Two, we need improvement in liquidity into the markets.
Better. I think that works. Convergence and more liquidity into the system. Thank you so much, Mr. Ibrahim, for that clarity and understanding of that very important topic of discourse. Let's move to the Purchasing Managers Index, which is looking very good, above 50.0 points at this time. Did this come to you as a surprise, looking at the factors that led to this?
Well, I think it is a positive surprise, to be honest, because what it indicates is that, that Purchasing Manager Index, was a lot stronger in the month of November relative to the month of October. And it sends one signal. The signal it sends is that, economic activities generally, for the final quarter of this year is much stronger compared to, the previous quarter, and probably also compared to, the same quarter of last year. So, and it speaks to expectations around the GDP for the final quarter of 2022. These numbers that we're looking at indicate that Nigeria probably is going to see stronger GDP growth rates in the final quarter of 2022 relative to, the number that we saw in Q3, and possibly also relative to the number that we saw in the final quarter of 2021. It is surprising in summary, but in my view, it is a positive surprise.
Very interesting one. Let's move further and talk about the business conditions now. This report is saying that there are improvements in business conditions. And many will tell you diesel, as at today, sells for about 800 naira, in some cases above 800 naira. Fuel scarcity is also everywhere. And if you're going to drive in to buy fuel in any filling station, you would agree with me that you'll be buying for above 200 naira. I don't know if that is happening in your location, but it's happening around my location. Inflation is also on the high side. So I am worried how come this report is making it look like all is good.
Okay, so let us just be precise here. All is not good.
Thank you.
And the report largely speaks to pressures in terms of cost, the cost of doing business. No doubt, the cost of doing business has gone up, but what remains fundamentally supportive of the economy is demand. We are seeing rising demand in the food businesses across the country because people have to eat anyway. We are seeing rising demand in the telecommunication space, particularly, speaking about, demand for data services. We are also seeing rising, demand in cement, consumed by the public. So those are some of the elements that are driving the positive tone of the report. If you look at the largest sugar producer in Nigeria, for instance, that business recorded close to 13% growth in sales volumes. Who are the people consuming this sugar? It is myself, yourself, and businesses across Nigeria. So things are really going better in terms of demand. And in terms of consumption, it is just that they are coming at relatively higher prices because of relatively higher costs. So those are my views around the cost, the demand, and the supply sides.
Brilliant. Brilliant submission as usual there, Mr. Ibrahim. But let me follow up and ask you that one way or the other, when all of these issues affect manufacturers and business person, the higher input costs will be passed to the customers. That is me and you. That is what will happen. Because when there's an increase in prices, they have to manage their workforce, manage customers like us, and pass this on us. Is either they shortchange us or they increase the price so that we can get that same value. What does this mean when our purchasing power is also dropping?
So it means a lot, and to be honest, it is negative, for us as a country. But the elements for consideration are the following. The first is that we are talking about aggregate demand in this case, and that captures the purchasing power of existing consumers, and it also captures the purchasing power of new set of consumers that will emerge either by coming into major cities or by birth or by movement in their ages. So these are some of the factors underpinning demand as we see it. While we recognize that prices will remain elevated for most goods and services because of rising inflation, we also bear in mind that we are going to see an increase in the number of consumers in the country over the medium to long term, bearing in mind our population growth rates. So those are the views that we have to consider and probably expect much stronger volumes in terms of output, in terms of supply, and also in terms of demand. But the existing consumers may not necessarily demand for more because of the downside to their pocket size. But new and upcoming consumers, of course, are going to be the ones to partly drive the expected growth in demand.
Oh, always an interesting way to. But let's now look at the optimism that is expressed as we move to the end of the year. Oh, of course, it's just weeks or days to the end of the year. Do you think that we will stay on this positive line, talking about the Purchasing Managers Index moving forward?
Yes, I think we can still stay on the positive line, and it can still probably go, slightly higher. Number one of them is the festivity. We see that, being supportive of the PMI in the month of December. That is, likely to happen. The number two of them is, the travel. Travels down to the country by Nigerians in diaspora who wants to come down back to their families to celebrate with them. That also should partly underpin, demand. So we have some businesses, for instance, that have the last month of the year, which is December, as their strongest month in terms of sales value and also in terms of sales volumes. Telecoms is one of them. Cement is also partly one of them. Food businesses are also one of them. So we are going to see the index most likely, being strong and, ticking probably higher in the month of December to close 2022 on a much stronger note versus 2021.
Well, very interesting conversation as usual, Mr. TAJUDEEN Ibrahim. Thank you so much. Director of Research and Statistics and Strategy, Chapel Hill, Denham. Thank you so much for spending your Monday afternoon with us. We don't take this for granted. We appreciate it.